I don't think there's any company on the planet that gets people talking quite like Tesla. Is it a car company? A tech company? Maybe an energy company? Well, the truth is, it's kind of all of the above. And that's exactly what makes it so endlessly fascinating. And right now, in 2025, the story of Tesla is really a story of one massive paradox. Okay, first things first, let's just wrap our heads around the sheer scale here. Look at this. Tesla's market value doesn't just beat the old school automakers, it absolutely dwarfs them. We're talking more valuable than giants like Toyota, Mercedes, and BMW all put together. A valuation that big, well, it raises a pretty huge question. What in the world are investors seeing? And this is where the plot really thickens. On one hand, you've got this incredible, bold ambition, a plan to ship another 500,000 cars this year. But then, on the other hand, you have the cold, hard reality of last year, sales actually went down a little bit, even as the EV market as a whole was growing. So how do you square that circle? How can a company with slowing growth still have a stock price that's in the stratosphere? To really get why the stock is where it is, we've got to dive into the vision, the story that investors are really betting on. This is the bull case for Tesla. And yeah, it starts with cars, but believe me, it definitely doesn't end there. So that plan to add another 500,000 cars, it's not just a number pulled out of thin air. It's really a three-pronged attack. We're talking about finally ramping up production of the Cybertruck, rolling out some much-anticipated updates to the super popular Model Y, and, this is the big one, launching brand new, lower-cost models to go after a way bigger piece of the market. And here's the pivot. This is where you have to zoom out. Because while the cars get all the headlines, if you're only looking at the cars, you're missing the bigger picture. Tesla has very deliberately shifted its identity away from just being a car maker to being a full-on clean energy and technology company. Now, this is fascinating when you actually break down the business. The car segment is still the big kahuna, of course, no surprise there. But look over here. See that slice for energy generation and storage? It's already a pretty hefty chunk of the pie. And honestly, it's kind of the secret weapon, the hidden engine of the company's growth. And boom! This number just says it all, doesn't it? A 42% compound annual growth rate. That is absolutely explosive. This isn't some little side hustle. It's a powerhouse division, growing nearly 6 times faster than the car business. This is a huge, huge part of that bull story. So what is this energy business, really? Well, think of it like a full ecosystem for clean power. You've got the Powerwall batteries for your house, these gigantic megapack batteries that can literally stabilize an entire power grid, and of course, solar panels. It's the whole shebang, from making the power to storing it to using it. But for every incredible growth story, there's another side to the coin, a completely different narrative, one that's full of controversy and risk. To get the full picture, you have to look at the challenges, what we might call the bear case. And a huge part of that bear case, well, it revolves around the CEO himself. A recent working paper from researchers at Yale dug into this and basically concluded that Elon Musk's public, political statements have had a real, measurable, and negative impact on the business. The studies suggest his actions have pushed away some of Tesla's core customers. And they actually put a number on it, a pretty staggering one. They estimate that the impact could be as high as 1.2 million fewer cars sold over a 3-year span. It's just a crystal clear example of how the CEO's personal brand and the company's brand are now completely tied together, for better and for worse. And then there's the pay package. Shareholders recently gave the green light to a new compensation plan that, if every single milestone is hit, could theoretically be worth up to $1 trillion. It's a number that barely feels real, right? And it makes you ask a pretty important question. What is the real point of a payday that massive? Which brings us to the big question. Is a package of this size really just about paying an executive for a job well done? Or is there something else going on here? Turns out the answer is less about money and a lot more about something way more valuable. And you don't have to guess, because we have it in his own words. The CEO himself has said that this whole thing is mainly about making sure he has enough voting power at the company. He wants to steer the ship, especially with powerful tech like AI, without having to worry about a takeover. So you see, the $1 trillion package, it's really a tool for control. Okay, so how on earth do you put these two completely opposite stories together? On one side, you have this incredible innovation and growth, and on the other, all this controversy and these big questions about control. This is the synthesis. This is how the market tries to make sense of it all. So we're right back where we started, at this fundamental puzzle. We've got the bull case, we've got the bear case, we've got ambition clashing with reality. So what's the missing piece? What possibly explains that valuation? Let's just look at the raw numbers for a second. A company's PE ratio, right? It's basically a simple way to see how much investors are willing to pay for every dollar of profit. Your average car company is around 18. Tesla's is over 250. It's not just higher than tech giants like Apple and Amazon, it's in a completely different galaxy. By any traditional yardstick, it makes absolutely no sense. And that right there, that's the whole key. You can't use car company math because Wall Street isn't looking at a car company. Investors are pricing Tesla like a high-growth, high-risk, but potentially high-reward technology company that's trying to blow up several industries all at once. So if they're not just buying a company that sells 1.8 million cars, what exactly are they buying? What is this future promise that makes it worth over $1 trillion? They're buying a ticket to the future, a whole portfolio of massive world-changing bets. They're buying the potential of a fleet of self-driving robo-taxis that could completely change how we get around. They're buying into that explosive growth in the energy storage business. And they're buying a future that includes AI and robotics, everything from the software in the cars to actual humanoid robots. It's a bet on total disruption. And all of this, everything we've talked about, it really boils down to one final central tension, the one theme that's at the heart of the entire Tesla story. And this is the heart of the paradox, isn't it? The company's single greatest strength is this singular driving vision of its CEO. That's what allows for this radical, game-changing innovation. But that exact same thing, that singular control, is also its biggest risk, creating all the volatility and controversy that we see. The strength and the risk are two sides of the very same coin. And so that leaves us with the ultimate question, the one that will decide everything for Tesla. Is that kind of total, concentrated control the secret ingredient you need to create something truly revolutionary? Or in the end, does it become the single biggest threat to that very vision? The answer to that question is going to define the future of Tesla.